Hello, I'm Lindsay Hall, Chief Market Strategist for the RMB Group. Welcome to our video series, A Short Course in Futures and Options. In this lesson, we will help you identify resources for seeking options quotes you desire. The best places to find quotes for futures and options in printed media during the business week are Investor's Business Daily and the Wall Street Journal. Barron's probably has the most extensive coverage of futures and options, but it's published just once a week. If you live in or near a large city, your local paper may print a select list of futures and options, but as a rule, local coverage will not be as extensive as the national business dailies. Exchange websites and brokerage firms also supply online quotes. In fact, in today's cyber economy, the best and most reliable places to find quotes is online. As we mentioned earlier, you can get current quotes online at the Rutz & Belmont Group website, www.rmbgroup.com. There are others as well. We examined crude oil futures quotes earlier in the series. Now let's take a look at the crude oil options quote grid. Since crude oil options values are based on the crude oil futures contract, their prices are closely correlated. A small move in the underlying futures contract means an even smaller move in the options. A big move up means the calls will gain and the puts will lose. A big move down is the opposite. On this sample futures options quote grid, the title tells you that crude options are quoted in dollars per barrel and that each option covers a futures contract of 1,000 barrels. Call options are listed in the left 3 columns, and put options are listed in the right 3 columns. The various expiration months are listed horizontally. The strike prices are listed vertically. Nearly all websites list prices in this format. To find the dollar price of any crude oil option, simply multiply that option times the contract size. For example, the January $70 call listed in the example is going for $5.82. To find the dollar value, multiply $5.82 times the 1,000 barrel contract size to get $5,820. The March $73 call closed at $5.89 or $5,890. Notice that the further out in time you go, the higher the price of the option. It's no accident. When you buy options, you're literally buying time. The old saying, time is money, is especially true for options. The right to buy crude oil at $70 per barrel will obviously be worth more than the right to buy crude oil at $72 per barrel. Similarly, the right to buy crude at $72 good through March of next year will be worth more than the right to buy crude at $72 through the previous December. Take a look at the price grid. The puts and calls with strike prices closer to the money, or where the market is, are worth more than the puts and calls with strike prices further away. Puts and calls with more distant expiration dates are also more expensive. Newspapers are restricted by space limitations when they print option prices. They will not list every single option that is trading. Some will not list options at all. Generally, they limit listings to the closest 3 expiration months and to options with strike prices relatively close to the money. These limitations mean the newspaper is not always the best source for quotes. Your broker is. Should you call your broker every day? Probably not. Many brokers have websites listing all available options. Bookmark that site and your option quotes are just a mouse click away. The most efficient way to keep track of your option positions is to keep an eye on the price of the underlying commodity itself. If crude makes only marginal moves, your option will not set the world on fire. There's probably no need to get a quote. If you notice that crude has jumped or declined a couple of dollars or more, the odds that your option has done something dramatic increase substantially. It's probably time to give your broker a call. You have now finished our 8th video in this series. Our next video, Figuring Profit Potential, will help you do just that.